The ayes to the right, 308. The noes to the left, 322.
The ayes to the right, 308. The noes to the left, 322. So the noes have it. The noes have it. Unlocked.
Hey there, Dan Frio with the Mortgage Update. Thanks for tuning in. I went to Myrtle Beach Thursday, Friday, Saturday, Sunday, and golfed. I am back now and fresh as a daisy. So I'll be back all week. Let's pick up where we left off last week. So we were writing about this range, and I said, my guess is, I don't call it a guess. The technicals are telling me that we should hit a level here and start bouncing back up and doing some things if the world stayed the same. But it's not, because one of the big issues right now is Brexit, and I'll get there in a minute. But let me just kind of recap kind of what happened today and give you some news on the housing front. A lot of the economic news today in the stock market and other areas kind of reflected on Brexit, and I'm going to go there in a second. But the Dow was kind of flat. It was up 40, but no big deal there. The whole thing is hinging around Brexit. And I might do a video tomorrow kind of explaining why Brexit is kind of playing havoc with with everything. And you see here, Treasuries fall as Brexit deal faces some uncertainty. Then you see the stock market, Brexit weighing in. So a lot of things are hinged on Brexit. So maybe tomorrow I'll come up with a video, just a short video. I won't bore you now on what's going on there. But let's get to some of the good points about housing. Because if you're watching this, your concern is you're either a realtor or a mortgage person, or you're interested in what's going on with rates and the housing markets and things like that. You could be a flipper even. And but the kind of the silver lining behind a lot of things right now is first-time home buyers are making up a third. 33% of the market right now is first-time home buyers. And that is an area where I think there's a lot of uneducation or what's the word on there? Not a lot of people in that probably age bracket buying their first home knows, everything and anything about mortgages. And that was one of the reasons why I put this YouTube channel together, is kind of to teach you, in areas of, how much what should your costs be when you're buying a house or even refinancing? How do you shop rates? Who do you use? Do you go online and just type stuff in and hope that it works? The biggest thing is, how much money do you need as a down payment? And it's surprising, even people in the mortgage business will tell you the wrong answer. So that's one of the reasons why I put this channel together, was help people with, misinformation out there, from mortgages, down payments, credit, and the whole ball of wax. So like I said, the silver lining right now is first-time home buyers are making up 33% of the home sales. Also, values year over year are up on average just a hair under 6%. 6% return. Think about it. That's a good investment. Either you're throwing money away at rent or paying your landlord's mortgage. So you're paying their mortgage, driving down their balance. And also, their house is appreciating, plus they're getting all these tax write-offs. So if that's where you want to be, God bless you, stay there. But if not, let's look at trying to get you into a house. At least answer those questions so you get the facts, and you don't just get sold by your realtor or some financial guy that just has his best interest in mind. So you'll notice today that there was a lock advisory. Earlier today. What happened was the Brexit deal, and I just showed you a short video of that before I started this, is it went into vote. They thought they had the votes, and then it came back and they said they're going to postpone it now for a month or whatever. So again, I'll post a video on that to kind of show you to explain that. I didn't take this warning, this lock, because I didn't think it was going to be that big a deal, because I didn't really see this coming. This shouldn't have come last week, but a lot of it is, Brexit and the Trump, trying to impeachment and all the other stuff is, a lot of stuff is kind of getting, I think, a lot of people aren't as interested anymore. They're just thinking, all this is a bunch of fluff right now. And so rates kind of went up a little bit. So let me recap this if you're new to this. My name is Dan Frio. I'm a mortgage advisor for over 30 years. And what we watch, or what I focus on, is this number right here. Okay? This is what they call mortgage-backed securities. This is actually the instrument or bond that gives us mortgage rates. It's not the 10-year Treasury, which I even have people in the business, friends of mine that I know, that will monitor this like a hawk. And I'm like, why? Well, because that's mortgage rates. I'm like, no. Mortgage rates are dictated by the mortgage-backed securities market. So my information that I do is even helping those, even friends of mine that are in the business. So let's get to some technicals now. So you're going to see a whole bunch of lines here. What are these lines? Okay, so there's the Fibonacci levels. And if you have watched my show or listen to my show, or even watch it on here, but I do have a radio show in Chicago, actually 2 of them. I'm on WYLL every night from 7:30 to 8 o'clock in Chicago, and I'm on WIND in Chicago on Saturday mornings from 7 to 8. So Fibonacci levels are right here. This is a floor, so you can see it. Usually it'll bounce down and bounce up. So basically, just think of this as a bowling alley. And these are those bumper lanes. So we're bumping around through. So this is the floor, this is the right side, and the left side. So that's the ceiling. So mortgage rates should, if everything's in a normal market, should kind of bounce around in this area. Okay, this is a huge spread. Normally the spreads aren't that big between these because right now we're having huge swings in the markets. If you're invested at all in stocks, you realize, okay, one day we're down 300, 400, 700. The next day we're down up 500. It's all over the board. So everything is emphasized or exaggerated. Okay. So, that's what's happening right now. So we have the Fibonacci levels, top and bottom. And then you have these charts here. This is a 25-day moving average, 50-day moving average, 100-day moving. So it just kind of blends out and tells you where the averages are. The scary part is I was right in here. I'm saying, okay, we should be flat. We should be basically hover around this area or start to go up. Well, we dropped a little bit. We didn't drop a lot. We dropped a little bit. So I'm not too concerned with that. Then we got an alert today saying lock, 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 lock. And I saw people running all over the place like the chicken with their head cut off. They're locking in their rates. Well, why? Because the Brexit deal was supposed to have gone through. It didn't. I didn't think it was going to play that much of a havoc on the market anyways. So I didn't lock. So unfortunately, down here, a lot of people locked. So it's like the stock market. You just bought or sold at the high. So it'll make sense as we go proceed with this. So let's get back to this. So this is the price of a bond, the mortgage-backed securities bond. As the price goes up, which is green, it goes up, rates or the yield on the bond go down. There's an inverse relationship between the price and the bond. Okay? So we always want the price going up. That's good. As the price goes up, yields come down. As prices go down, yields go up. Okay, so that's kind of what's going on. That's what happened today. Everything was kind of flat. Let's go into some what news is coming out. You see some of the stuff that I follow right now. This Dow was up 27, no big deal. S&P down 10, no big. Pretty much everything was flat. Everything is hinging right now around Brexit, and you see that on this. Then when we go to the stock market advisory, you see all this stuff. Brexit. There'll be more Brexit. If I scroll down, there's more Brexit. So Brexit is a big deal. And again, I'll post tomorrow on kind of what you need to know in regards to Brexit. I don't really want to bore you to death because I don't think you're that concerned about it, but I'll put something out there for those that are concerned. So what's coming up? Well, mortgage application data is coming up tomorrow. You're not concerned about that. Home pricing index, you will be concerned about that. So we'll go over the pricing index, what's going on that, and the 5-year note auction. That it could play havoc on the markets. I don't think so, because it's like, you're going out and you're selling all these bonds. If there's aggressive buying, again, that pushes up pricing, brings down yields. So just recently, the Fed came out and said they're going to start buying up or do some quantitative easing, which means they're going to buy these up, pushing the prices up and yields down. And then also the Fed is now expected, I think there's about a 40 or 50% chance or a gauge that they are going to cut rates again this month. I'm waiting to see. If I'm a betting man, I'm 50-50 on that one because I don't really see a lot going on there. But you'll also see in here the Fibonacci levels, the moving averages, and so forth. Right now, again, the positions here are saying lock. I'm on the sideline again with that, saying I am not locking my clients because I don't think this Brexit deal is going anywhere. We go back to China. For those that were watching last week or the week before, China was playing havoc on the market. They thought they had a deal, then they didn't have a deal, and they thought they had a deal. So if you're in this business, I would highly suggest you sit next to your computer all day, every day, unfortunately, and watch what's going on. Because if you hit one of these turbulent, days such as this, I mean, you might be looking at a 0.25% rate increase that day. The problem is most consumers or most home buyers, they don't see this. All they see in the news is, mortgage rates are at an all-time low, and they scan all over the country and try to find that rate. What they also don't look at or they don't pay attention to, how much is it costing you to get that rate? So that's where, I always go through, don't be wowed over the rate. Yes, you want a phenomenal rate, but don't pay exorbitant fees to get there. So I hope you like the video. If you do, please don't forget to give me a thumbs up. If I can be of any help to you, if you're anywhere in the country, give me a call at 844-775-LOAN, LOAN, or 5626, or shoot me an email at D as in Dan, Frio, which is FRIO, at parksidelending.com. Thank you so much for tuning in, and I will be back, God willing, tomorrow, same time, same place. Take care.